Welcome to Under One Roof MTL, where we are demystifying home ownership 1 week at a time. My name is Robin Flynn, joined as always by Martin Spalding of Fred and Martin Mortgages. Good afternoon, Martin. How are you?
Good morning, good afternoon, Robin.
Good morning, good afternoon, good night. Legendary call right there. Speaking of legendary calls, did you hear Pierre Houd's call for Cole Caulfield's 50th goal this week? I think it will go down as one of the greatest calls in sports history. I'm a little biased as a Habs fan, of course, but it was just beautiful. I think he went like from boom boom to Steve to he just listed every Canadian who'd ever scored 50 goals and into Cole Caulfield. It was goosebumps. Incredible.
Who was our last 50 goal scorer? Was it
Stéphane Richer.
was it Richer? What, like in 1990? Is that what it is?
36 years ago was the last time the Canadians had
That's
a 50 goal scorer.
no wonder we haven't won the cup. And who
Yeah,
was
and
it before
now
that? Was it Lafleur?
Steve Shutt.
Steve Shutt. Wow. Flashback.
Yeah. And you also have Slavkovsky scoring 30 the same night. You've got Suzuki encroaching on 100. You have Jakub Dobej in goal, who broke Carey Price's rookie wins record. This team,
Hey,
ça sent la coupe.
Robin, are you a hockey fan?
I mean, I worked at TSN since 90 for over 10 years, so
I think LJ's with us. Why don't we say hi to
yeah,
LJ?
oh yeah, LJ Aguinaga, known Habs fan. I saw you were at a game this week as well.
Tuesday night, yeah.
Yeah,
It was last date night. I got a great game, overtime or shootout win more so. Great experience. It was my first one of the season, but it was great to get out there and see the boys play live.
amazing. Now let us all hope for a fruitful playoff season, shall
Ça
we?
sent la coupe, ça sent la coupe.
Okay, let's celebrate Cole Caulfield's 50th with giving away some cookies from Felix and Norton. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. The first person to text in the correct response to 514-790-0800 will receive cookies from Felix and Norton delivered straight to their door. Our question this week, what does it mean if a property is turnkey? When we call a property turnkey, what do we mean by that? If you think you know it, 514-790-0800 and include your first name, please. Gentlemen, what is in the news this week? Mortgage rates are rising right now. Up, up, up. What does that mean exactly? I'm sure there's lots of people who are thinking, maybe I want to sell my house, maybe I want to refinance. That means breaking your mortgage, and that could be costly.
So fixed rates are rising because, you know it, bond yields are rising. And bond yields go up when markets worry about inflation and the economy. It's less about the Bank of Canada right now and more about the bond market. So fixed rate mortgages are going up because lenders are adjusting their pricing as their funding costs rise. Breaking a mortgage is becoming more expensive, especially for fixed rate mortgages, because penalties, we often talk about the IRD, the interest rate differential, are tied to rate fluctuations. Borrowers who locked into lower rates may face larger penalties if they try to refinance or exit early. This creates a situation where borrowers are stuck in their current mortgage unless the savings really justify the cost. Higher rates don't just impact new buyers, which is important. They also affect existing borrowers' flexibility. And I know that LJ was on with Elias this week. You want to add to that?
Ultimately, what we're seeing is kind of the instability in the market that's bringing us to where we are today. So that's exactly what I spoke about with Elias, is that the war, the lack of clarity is leading to where we're heading right now. The risk of more inflation happening in the US right now that'll probably trickle into our market as well, obviously. It's all these different levers that are being pulled upon, and whenever there's uncertainty in the market, interest rates tend to rise because bond rates go up effectively to try and price these things in. So that's what we're seeing right now, and we're going to keep a close eye on it for you because every day is a new adventure out there.
So just for fun, I mean, Americans are complaining about a $4 gallon of gas. So I did the conversion. So I did, the gas comparison. So we're paying over $2 a liter right now. So when you convert that into a US gallon, we're paying over $7.50 per gallon. A lot of people forget that. They go, yeah, we're paying $2 a liter. What does that mean? But that means if Americans were paying $7.50 a gallon, it would be anarchy south of the border. And another thing that's really important to look at within a gas price, one third of that is taxes.
Yeah, I used to work at a gas station when I was a college student. That was my job. It was great because when it was slow, I could do my homework. It was amazing. Um, People used to come in all the time and, like, call us thieves and things like that, and at the time, gas was, like, 99 cents a liter. This was, 20 years ago, but, at the time, I was making minimum wage, like, I wasn't a thief, and even my boss who owned the gas station, she told me, she's like, "If I didn't have a car wash and a dépanneur, I wouldn't even break even." Like, we sell gas is what hooks people to come in, so I always think it's
Were
good to keep
you
that in
really
mind.
doing your homework or were you watching hockey games?
There was no iPhones then, there was no smartphone. I would have the radio on, always listened to the hockey games on the radio, but I think they were on CJD back
Yeah,
then,
they were
actually.
CJD back in the day, yeah.
Yeah, exactly. Okay, also house prices, some good news because it's not all doom and gloom all the time over here. House prices are dropping in Canada's most expensive cities. The thing is, those most expensive cities were already very expensive to begin with, so it's not necessarily helping those first-time home buyers, is it, LJ?
No, not at all, especially not in our market. I was actually at a National Bank economic presentation earlier this week, and we were looking at all the different Canadian markets to see kind of how they were performing ultimately. And two of the top performers across Canada were actually Montreal and Quebec City. Quebec City was up something close to 12% year over year in terms of pricing, and Montreal was up at about an average of 3 to 4%. So while the rest of Canada is hurting from a real estate perspective, and a lot of the news that we do hear is a doom and gloom, and if you have equity, you're losing it by the day and by the minute, our markets have not been the same story. Across the board, we've seen increases in prices even today, with some segments of the market being more impacted than others. We've seen the growth maybe in the North Shore and Vaudreuil slow down a little bit. The South Shore has actually continued to grow pretty substantially still right now. So our market very robust, very much still increasing. Not going to help out the first time buyers, but still helping out anybody who has a property right now who's currently an owner and is seeing their equity continue to increase.
Those first-time home buyers that you guys are working with, I'll loop you into this, Martin, as well. Are they buying on the island, or are these first-time home buyers going, dans les banlieues, into the suburbs to get into the market?
You obviously get more value the further out you go. But in the third segment of today's show, we're going to talk about down payment. And obviously, for a lot of young people, the biggest barrier is coming up with the initial down payment. So, we're going to give you some sort of insight as to how you can leverage all the programs that are out there and also go to the bank of mama and papa and try to get a gift from them. So we're going to talk about that in the third segment. But yeah, unfortunately, home prices have increased significantly faster than salaries. And so a lot of the generations that are following us are having trouble coming up with the down payment and or getting qualified for anything that's on island, because a lot of stuff that's around the Bell Center is about 1,000 square foot. So you're looking at a 500 square foot apartment for $500,000 plus condo fees, plus municipal and school taxes. It really pushes people out off island. We're seeing a lot of stuff in Hudson, Vaudreuil. Anything that is just off the island seems to be a little bit more affordable for younger people.
Yeah, LJ, when you're seeing those younger first-time home buyers, where are they typically looking?
I think it really depends on the type of first time buyer, right? When we're dealing with professionals, even though the costs are higher, obviously, they want to stay closer to their work right now, and they don't want to have to deal with potential hour commute. So a lot of them are opting to buy the condo, which is actually a great buy right now because the prices are still compressed, or get a smaller townhouse, or get a smaller house maybe in and around the city. They'll pay a little bit of a premium to stay in the city, but at least they're getting what they want and have the commute that they're looking for. And then we do have obviously other first time buyers as well that are more focused on having more space. That's always been their dream. And they're opting to go into the suburbs, whether it's in Chateauguay, whether it's in Beaujour, or even just in the West Island. Laval's also been very popular. Brassard, Longueuil as well. Kind of depends what's important to them. But we've seen neighborhoods like Carignan, St. Hubert grow lots recently as well. So case by case, honestly.
Interesting.
Can I go off topic a little bit? Because there are 3 or 4 stories that caught my eye just before the weekend. Rents are declining, largest drop in the last 5 years.
Mhm.
Home sales up 2% year over year, March to March. Employment rising. The Canadian economy added 14,000 jobs. things that we should discuss next week.
Absolutely. Great tease, Martin. It's
Thank you.
almost like you've been working in radio for a really, really long time. If, by the way, you're interested in purchasing a multiplex, that's a great way to get into the investment market, get some passive income rolling in by calling the Plex Doctor. Then they can take care of everything for you. 514 709 6397. You can also visit their website at plexdr.com. Still to come, if you're thinking about buying a home that needs a little bit of work, LJ has some advice for you so you can avoid a money pit. That's coming up after we check traffic at the CJD 800 Traffic Center. This is Under One Roof MTL on CJD 800. I'm Robin. That's LJ. That is Martin. We're with you until 1 p.m. So, you found a property that needs a little bit of work. Is it an opportunity or a money pit? How do you spot the difference? How do you make sure it doesn't become a money pit? LJ, what's your first advice here? When buyers come to you and they say, I found this property, it needs a little bit of love, what are you looking for to make sure it's actually a good opportunity?
So my first question always comes down to, do you have experience with these types of properties, or do you have a team who's willing to guide you through this? Do you have the right people who are going to be there to support you with all the renovations, all the work, all the permitting, all of the red tape you're about to go through? Because doing a flip potentially or doing an investment of this nature could be very lucrative. You know, people have made money over the years, but it comes down to really making sure you have a solid budget and a solid team in place. And this is where I'm always very hesitant with people who are not experienced getting into it, because they've all seen the TLC shows, they've all kind of HGTV, they've all seen how it all works out beautifully on TV. But I've seen the flip side of it. I've seen how private loans can go nasty. I've seen how renovation budgets can go through the roof. And I always want to be very cautious when approaching these types of things, because it's obviously could be very detrimental to somebody. So if they don't have experience and they don't have a team, I tell them to go find a team first, because without that, we're really spinning our tires here. If they do have some experience, then obviously we take a really deep look at the property. We'll analyze what we think it'll be able to resell for after, what'll make sense in terms of now, and what I think the budget should be for the renovations, just to kind of give a sense check to see if it lines up with what their expectations are. And then from there, we're doing a very thorough inspection, because even if we are planning on gutting it, we don't usually want to have to start doing redoing, pardon me, foundations or different structural things. You know, we really want to focus, generally speaking, on more uh, aesthetic things of the property, right? We want to redo kitchens and floors and bathrooms. If the property has a good roof on it, good windows, good foundation, we can save a lot of money on those things and really focus on the emotionally driving parts of the property. You know, the ones that are going to pull on people's heartstrings and make them offer $10,000 more because they really foresee themselves enjoying this kitchen and hosting the whole family in the dining room and all those kinds of things. So it's really comes down to doing a thorough due diligence, like always, obviously, and understanding what the costs involved are going to be like, and where we go from there.
It's funny you brought up those HGTV shows because even though, yes, it always works out, they flip the house, they find the buyer, it's wonderful. I don't think I've ever seen a single one of those flip shows. I'm thinking of Masters of Flip specifically, where they've not gone over budget. Literally every single time they find some sort of rot in the deck or mold in the bathroom. There's literally always something that comes up. It's what's your experience like with that, LJ? Does anyone ever actually stay on budget for these projects?
Very rarely. I've seen it a couple times, and they were really, really good about kind of getting the appropriate quotes, getting kind of all in pricing, which is always difficult to do as well, and making sure they could respect what they're heading with it. But more times than not, even my own personal renovations, I've renovated over 50 units, done a ground up development, and it is almost never come back on budget. So we price in a margin, a buffer ultimately to not get caught in a sticky situation.
Are there any types of issues that look scary on the surface, but are actually just kind of cosmetic, no big deal, relatively easy fixes?
More times than not, one of the scariest things that people almost jump out of their seat for is a foundation crack. And the reality is that 99% of homes have foundation cracks. The question of it is really, is there water infiltrating from it? How thick is it? Because repairing them is quite simple. It's usually about $1,000 repair, which is nothing, but again, it's very manageable in terms of repairs. They dig out around it, they fill it, they put a membrane behind it, and then they cover it back up. So it's not a huge deal to repair, but if left unrepaired, could be very problematic, obviously. So I'd say that's one of the largest things that people get scared over immediately. Same thing sometimes with the mold remediation in an attic. It's a very common problem that we see quite regularly because people get very nervous. Obviously, the word mold triggers a lot of people. But again, you get in a mold remediation expert. We work with a company called Sportech even. They've done excellent work for us in the past. And they go in, they do the remediation. We obviously make sure that there's no water coming into the attic as well. And off you go. So I'd say those two things are probably, they look a lot and sound a lot scarier than they actually are to remediate when the time comes.
So, if you're considering doing a flip, should you be prepared to do some of the work for yourself to maximize your profits, or can you just hand this off to a GC and then just say, you know what, I'll write the checks, and when I sell the property, I'll recoup my investment?
If you give it off to a GC, chances are you're not going to have a profit margin. Ultimately, in most flips in our market overall, the profit margin is going to be that 10 to 15% of profit and administration fees in the cost of what's going into this. So, unfortunately, no. If you want to do a flip and be profitable, you're probably going to have to do some of the work yourself or be the GC yourself. Obviously, find all the different sub trades to put it all together and go from there. That's what I've seen. Maybe 10 years ago, we were seeing different realities. Obviously, the cost of construction has gone up so much. It used to cost us $10,000 to do a bathroom. Now we're getting quotes on average for $30,000 to $40,000 to do the same bathroom. So when we take these things into account, your margins are being eaten up. So no, you're gonna have to GC the project if you want to make a profit on a flip, in my humble opinion.
Just for everyone to know, GC is general contractor.
Yes.
How should you set yourself fiscally? Should you go in there as an individual, or should you set up an Inc. or have a registered company so that this is actually considered a business? Do you have any insight on that, LJ?
If you're going to be doing flips, I always recommend setting up a company for it, just for liability perspectives. But the reality is, once you are doing this professionally, like your first flip, you wouldn't be considered a professional. But after you've done two or more, the government's going to consider you a professional. So there's going to be a lot of accounting implications that are going to come into this. And there's also going to be a lot of warranty implications that are going to come into this. So even if you sell your home without legal warranty, but you're a contractor, you can't sell it without legal warranty. You have to give a warranty on the work that you're doing technically. So even if the deed of sale and the says no legal warranty, they can still come back after you for these things. So that's where I would usually create a bit more separation and have a couple companies involved if you're looking for protection from that perspective. But again, if you're really solid with your work and you have no concerns and you are a man of your word and you're going to stand behind your work ultimately, then figure out what makes the most sense from an accounting perspective and go down that road.
So as we know, your principal residence, if it appreciates in value, when you sell, you don't pay capital gains. So how many houses can you flip as principal residences before you hit the threshold and the government says, "Hey, wait a minute, you're doing this professionally. This is just not you moving from one house to another."
There's no official answer to that question. It really kind of comes down to what you can justify. So if you're moving every year, they're going to flag you. Like that's definitely going to flip. But if you're moving every 2 to 3 years, and there's a reason for the moves, you can probably get away with it. And again, this is under sous toute réserve, as we say. It really depends on what the government's going to audit you on this front. But if you're changing jobs and you want to be closer to work, if your child is starting a new school, you want to be closer to school. If you just had a family, you want to be closer to your parents. So long as the move is justified, that it's not being done strictly for profit ultimately, that there is a fundamental reason for this move, you're going to be able to justify a lot more things. But at the end of the day, it's going to come down to what the CRA auditor agrees to or doesn't agree to. Again, annually, there's no chance. There's even laws that have been passed now, they're going to block you on that front. But if you're moving every 2 to 3 years, as long as you have a justification, I think you can probably manage to speak your way through it.
If you're thinking about flipping a property, you want some advice, you want to bounce some ideas off of someone who's done it, give LJ a call, 514-500-4040. He'll help you figure it all out. Coming up, everything you need to know about down payments. That's coming up after the news. This is Under One Roof MTL on CJD 800. I'm Robin Flynn with Martin Spalding from Fred and Martin Mortgages and LJ Aguinaga from LJ Realties. Everything you need to know about down payments. That seems to be the hardest thing about getting into the real estate market is coming up with that 5% down payment. So Martin, what can people do to actually achieve this goal?
So one of the biggest points of confusion for homeowners is the down payment. And one of the biggest barriers for home buyers is the down payment. So with lenders, it's not enough to say, yeah, I got the money. You need to show it. You need to document it. You need to prove that the source of the funds makes sense, and yes, that it's legal money. AI has made forging documents incredibly easy, so underwriters now are tightening the screws like never before. So, how do you go and get your down payment? There are all kinds of programs about there that you have to consider. You also have to consider going to the bank of mom and dad, especially if you're a first time home buyer. Let's just say that the older generations are sitting on the most wealth in Canadian history. And why wait till you pass to give them their inheritance? Give them a portion of their inheritance so they can get into the housing market.
Okay, so you referenced some programs. Why don't we go through some of those programs
Okay, we've
actually?
talked about these a lot in the past. So, number one, the best program out there is the FHSA, First Home Savings Account, best tool for first time home buyers. It combines both RRSP and TFSA. Contributions are tax deductible, and when you make a withdrawal to buy your first home, the money comes out tax free. So number one, FHSA, and that withdrawal doesn't have to be paid back, unlike the RRSP. So if I was to put them in order, let's rank them. So number one, FHSA. I don't want to trip myself up on all those letters. Number two, RRSP, the home buyers plan. Number three, TFSA. It's like accessible savings. And finally, whatever you have left in your savings and or in your checking account. That's the order you should leverage your down payment in. So if you don't have an FHSA and you're considering buying a home, open one up. The money doesn't have to stay in that account for it to benefit from the tax deduction. And as soon as you put it in, you can pull it back out and use it for your down payment.
So if parents want to help out their kids, but they don't have a giant lump sum they can gift them, or they've got multiple kids and they can't really, take out a second mortgage to help one and not the other, they can help by putting some money into their child's FHSA. So if you help your kid maybe open one when they turn 18, you can be contributing to this as well, can't you?
Yeah, I mean, a gift's a gift, right? So whether you're gifting them the money to put into a registered plan or you're gifting them just a lump sum, so when it comes time to show that you've got the down payment, you can also and that money has to be accessible when they go to notary. But there are some conditions when it comes to a gift. It just can't just come out of nowhere. So um, it can't be a disguised loan. It has to be a pure gift. So what the lenders are going to ask you to do is to sign a gift letter. They usually provide you with the template. They want confirmation of the relationship. So it's got to be family members who is gifting the money. They want to know who that person is. And they also want to see the provenance of the money. So sometimes they'll ask for the gifter's account where the money is now resting and the transfer into the borrower's or into the gifted person's account. So they want to see the trail. So, again, I mean, we started this segment. What lenders are really agonizing right now is the provenance of money. So, I mean, another thing is foreign money. There are a lot of people moving to Canada, and especially in the Latino population. And whether it's from Mexico, it's from South America, and they've got their money in South America, they've got it in Mexico. If you're considering buying a home with foreign money, start to transfer that money sooner than later. Because what happens is the lenders want to know the provenance of that money. So often they'll ask you for a foreign account statement. They'll want to see the transfer confirmations. They'll want to see evidence of the conversion. What's that money in pesos worth in Canadian dollars? Sometimes the documents will be in Spanish, and they'll want translations of those documents. So the longer you wait to do these things, the more jammed up you're going to get. And we can throw it over to LJ. Often when there's a promise to purchase that's signed, there's a window to demonstrate you've got your financing in place. Often it's anywhere between 10 and 15 days. Well, if that money is sitting in a Mexican account or in an account in Peru, and you tend to use it for your down payment, you may be a little bit stressed when the lender starts asking you for all this documentation and proof of provenance and what's the value of it with the exchange. So don't wait till the last minute to get these things organized. I mean, buying a house is not an overnight decision. You really have to think it through. And all the programs that we mentioned over and above, before before we start talking about foreign funds, all of these need to be considered. You can't just wake up one morning and say, "Well, I'm going to open an FHSA. I'm going to get an RRSP. I'm going to get TSFA. My money is coming from Mexico. I need to convert it. You're going to run out of time, and your loan's not going to be approved. So it starts with a plan, and it starts with leveraging all the programs to your advantage.
Would you even get a pre-approval if your money was still in an overseas or an account in a different country? Would that make it more difficult to obtain a pre-approval?
Well, it depends, right? There are many ways of getting pre-approved, but if a client calls us up and says, "Listen, I've got a U.S. account. I've got $150,000 in U.S. tender. What should I do with that money?" I said, "If you're serious about buying a home in Canada, transfer the money sooner than later. Transfer it now, because we know that banks are big organizations, and getting things done can take longer than everyone thinks. And if you say, "Well, I got pre-approved yesterday and I'm making an offer today," and your money is still sitting in a bank account in Florida and you're going to need that money in Canada, you got to get on with it. So, don't put the cart before the horse. Make sure that there's a sequence to your strategy. So if you've got foreign money sitting somewhere and you intend to use it for a down payment, what's stopping you from transferring it now? Transfer it now, and also show the provenance of that money. Because if it's not been sitting in an account for 90 days or more, that's where the lenders are going to say, "Wait, whether there's a huge deposit in your bank account, it's coming from a foreign entity. We need all that documentation." So if you intend to buy, transfer it now. What's stopping you? You're gonna have to do it sooner or later.
Let's talk a little bit about insured versus conventional mortgages because I think this is something a lot of people misunderstand. They think they need 20% down to buy a property, but that's not the case.
No, no, no. So there's insured versus conventional mortgages. So if your down payment is less than 20%, you'll need what's called mortgage default insurance. And I think we should do an entire segment on insurance because people get really mixed up with all the types of title insurance, default insurance, death and disable insurance where your mortgage gets paid off. There are so many insurances out there that people get really confused. So default insurance is that famous CMHC insurance, so the Canadian Mortgage and Housing Corporation insurance. So if your down payment is more than 20%, the mortgage is considered conventional and the mortgage default insurance is not required. So for insured mortgages, the minimum down payment depends on the purchase price. If the home is 500,000 or less, the minimum down payment is 5%. That's where that I got my 5%. That depends. If it's under 500,000, you only need 5%. But if the home is between, say, 500 and 1,499,999, the minimum is 5% on the first 500,000 and 10% on the portion above 500,000. And if the home is over 1.5 million, mortgage insurance is not available. You can't get default insurance. So you need to at least that. And so if you're buying something that expensive, you need at least your 20% down payment. So that means, for example, if you buy a house for 800,000, this is where people get confused. They say, "Oh, I got 5%. That's 40,000." No, it's not. The minimum down payment is 5% is not 5% on the whole amount. It's 5% on the first 500, which is 25,000, plus 10% on the remaining 300,000, which is 30,000. So the minimum required is 55,000. And this is running the math early is really important.
And the best way to do that is to get in touch with Fred and Martin so they can help you run those numbers and do the math for you. Martin loves doing math.
Oh,
He
I love doing
absolutely
math.
adores it.
I do
Loves
math
doing
all day long.
So to find out more about what your options are, get in touch with Fred and Martin. Go to their website at fredandmartin.com. Coming up, our property of the week plus the answer to our trivia question of the week. That's coming up after we check traffic at the CJD 800 Traffic Center. Wrapping up on Under One Roof MTL on CJD 800. I'm Robin. That's Martin. That is LJ. And LJ, you are taking us to beautiful Ville Saint Laurent this week for our property of the week.
Looking for something that actually stands out? Unit 204 at the Lofts Cavendish, located at 13801 Boulevard Cavendish in Bois-Franc, Saint Laurent, is a loft style condo with soaring ceilings, hardwood floors, oversized industrial windows, a gas fireplace, and 2 indoor parking spaces. Over 1,000 square feet of open concept living in a boutique 8 unit building, listed at $575,000. Call Amanda at LJ Realties to book your showing today. LJ Realties, trusted local results. Now, I do eat in the area a fair bit because I have a buddy who has his offices over there, and we get together at least once a month to have lunch. And we typically end up either at Pigeon Cafe or at Notre Boeuf de Grasse to grab a great burger or a variety of different options at Pigeon.
Yeah, Pigeon has a really great smoked salmon bagel. That's usually what my go-to is when I go there. Or if you're not super hungry, I've done workshops at Pigeon Cafe before. I'll just get their hummus plate. It's got like pomegranate seeds and just some pita.
Ooh,
Pick at it, you know? Really,
nice
really
and
good.
fresh.
Exactly.
You know what's really good
Really
at
good.
Pigeon is their coffee.
Yeah.
All
The
their
They
world's
do
worst
food.
coffee.
Yeah.
exactly.
Love it. Okay, let's get to the answer to our trivia question of the week brought to you by Felix and Norton. Our question this week was, what does it mean if a property is turnkey? A turnkey property is a fully renovated or newly built home that is ready for immediate occupancy or rental, which means it doesn't really require any major repairs or improvements. Did I get that right, LJ?
That is 100% correct.
So I guess most buyers are looking for turnkey properties right now. I think people in general, I'm speaking for millennials at this point, we're not quite as handy as our parents were. You know, my dad can walk in and fix anything. He just knows how to do absolutely everything. I wouldn't even know where to start. Turnkey is a necessity for me.
Robin, that's not true. You have to give yourself some credit. You'd know exactly where to start. You'd call your dad.
Well, exactly. I mean, my
That's 100% true. This is the reality right now we're seeing in the market. Most people are looking for turnkey, and those are the properties that are getting the best return right now. They're the ones that are selling the fastest for the biggest premiums ultimately. Properties that are turnkey, that are priced right, are moving typically in less than 2 weeks, to be honest. Properties that require work are sitting on the market for a little bit longer. And then obviously anything that's not priced right is being overlooked by all buyers right now. So pricing is so critical in order to make sure that you get your home sold right now in the market.
That's why it's so important to work with the right agent, the right broker.
It's funny. My
100%.
father's toolbox was a butter knife.
For real?
If he couldn't fix it with a butter knife, he would call somebody.
I call my dad when I need something fixed and he shows up. It's like a strap-on toolbox. Like he can like wrap it around him and it like wraps all the way around his body. I can't even pick it up. It's so heavy. He has every tool. And he just shows up, walks on over with it, and he's like, "What do you need?"
Reminds me of the show Home Improvement.
Yeah, oh my gosh. He's Tim the Toolman Taylor, but he doesn't get hurt. He actually
There you
fixes
go.
things. So congrats to Stan in Code St. Luke for correctly answering our question of the week. You'll get some cookies from Felix and Norton delivered straight to your door. That pretty much does it for us for this week. If you have a question that you would like to have featured on the show, you can email us at underoneroofmtl@gmail.com. Or if you just want to talk to the guys individually, you've got a question about your own situation, maybe you want to buy or sell a property, reach out to LJ, Fred, and Martin individually. LJ, where do people go to get in touch with you?
You can check us out on our website at ljrealties.com. Also find me on all socials with the handles LJ Aguinaga, that's LJAGUINAGA, or LJ Realties with an IES at the end. You can also call or text me at 514-500-4040. You can book a meeting directly with me at meetwithlj.com. You can also reach out to our property management team. Terry will take great care of you. You can reach out at plexdr.com, or you can call directly at 514-709-6397.
Martin, where do people go to get in touch with you and Fred so that you can do all their math for them?
So Fred was feeling a little under the weather. That's why he's not with us today. So if you want to reach out to Fred or myself, the best way is to go through the website. So fredmartin.com. You can actually book a meeting directly through the website, or our phone numbers and our email addresses are there. So if you're considering refinancing, renewing, you're a first time home buyer, you're looking at a reverse mortgage, or if you've got any questions when it comes to anything that's in the realm of mortgages or financing, give us a call. We also do actually commercial real estate as well. And we're also licensed in Ontario. So if you're moving to Ontario or you're moving from Ontario and you need some financing, we can cover both provinces.
Very cool. Good to know. And Fred is trilingual as well. He speaks Spanish, so he
His
can help
Spanish
you out.
is impeccable. He's married to a lovely Mexican woman, and you should hear him rifle off Spanish. So I sit there and I go, "Vamos a la playa, una cerveza," and that's about it.
The important stuff, really.
Absolutely, you know it.
If you missed anything, you can listen to this show in its entirety. We're on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin. Go Habs, go.